Okay, so I think this time you can hear me, but before just let me know you can hear me. I just tried to fix my problem. Do you have any idea about OBS? I'm just trying to fix this, but I don't know how to fix this. I hope you can listen to me. I mean, you should be listen. Class, still no sound. Oh man, are you kidding? Seriously, still no sound. You guys can't hear me. Just let me know. It is okay. Okay. Hans, thank you, brother. There are so many technical issues to the OBS. I don't know how to fix that. So today I'm going to talk about the news and the rules. Before going into the deeper, you have to just bring your notebook with a very nice pen. You can bring a very nice gel pen. I love gel pen. And if you don't just write down the rules, then it will be really difficult for us. For you or for me as well to remember everything. So it's better to write it down, and later when you will just see the rules again and again, you will be remember everything. Okay. So there are some kind of news, they are like very dangerous. For example, CPI, NFP, non-farm payroll, then there is PMI and the FOMC. I will talk about FOMC later, but before FOMC I will talk about uh, NFP, PMI and CPI. Just remember these three names. They're very dangerous. They're like killer. Okay. Most of the time, you will see this type of news actually release at 8:30 a.m. New York local time. Whatever time I talk over here, it's New York local time. If you go to the trading view chart, you will see from here it's UTC -4. The New York. Okay. So I'm talking about New York. So and thank you, Abdullah Al Kafi uncle. Thank you very much. So the news they will release at 8:30 a.m. or 9:45, and last time is 10. You will see most of the time these three news actually released at this three time. What is the first rules? The first rule is whenever you will check your the Forex factory calendar, and in weekend, Saturday or Sunday, you just take a look where is there any this type of news or not. Okay, if you see over here, there was PMI at 10, and it was in I think Monday. Okay, it was in Monday. So and there is non-farm payroll tomorrow 8:30. Okay, so if you see this type of news, if you have to actually close your chart. What do you mean by to close your chart? You can't take any entry after the AM session just before that news. Tomorrow we have NFP, so today morning session is the last time to take entry. You can't take any kind of entry after today's AM session. You can take, but most of the time you will see you are manipulated by the market. Okay, the reason is I believe this market goes with an very nice algorithm. Okay, there is algorithm who is actually running this price action. When it goes with algorithm, there are some rules. You can just follow the rules and you can take entry, you can get profit. It's very simple. But whenever this type of big news arrived, the market runs by some kind of human being. So when human actually I mean they print this price. What happened? No, go. When human actually print the price, they don't care about any kind of rules. Okay, they just do it by themselves. That's why. And when human can actually give their hand into the price, whenever there is big news, this type of news, they they actually take care of the price by themselves. That's why there are so many manipulation. And if you ever see this type of news, you will see there is very nice consolidation before the news. I mean the before, I mean today PM session, you will see some kind of consolidation before the news, because they will make some liquidity. They will just go up, down, take the buy side, take the sell side. They will take energy. I mean the price will take energy to run by using that news. That's why this is your first rule. Just close your chart, otherwise just read the price before the news. I mean from the PM session you have to close your, I mean, trade. You can't take any kind of trade or holding your trade. This should, it is the best idea. Okay, so that was the news, I mean the big newses. And now FOMC, I really love FOMC. It's because most of the time you will see FOMC actually release at 2 p.m. New York local time. And as per ICT, there, I mean, two run. Okay, at 2 when the news release, you will see a run, and that run actually most of the time fake run. That's why it's very easy to understand that at 2:30 which way price will go. Do you understand? I mean, if you see at 2 price went like this, and then price was just consolidating over here until 2:30, like something like this. When the 2:30 will arrive, exact 2:30 or 2:31, 2:3, I mean 2:31, 2:32, you will see a very big opposite run. So this run was the fake run, this run was the real run. Okay, and this run will be huge, man, huge. That's why FOMC I really love. And there is another kind of price action you can see, and that is you will see this this 2:30. Okay, so price went above, also price went below, then it came here. Now how do you define which was the way at to run? Okay, you have no idea which way it went. Okay, then you will just wait to see what price is doing until 2:30. Just before 2:30 you will see a run. It is like the high run. If you see this kind of run, then you can just think, okay, at 2:30 I will get the opposite run. I mean this way. If you see the price was, I mean it was just going lower, I mean this way before 2:30, and there was a very big candle, you will expect after 2:30 I will get the higher run. This is the easiest way to read the FOMC, and I will explain more about FOMC when I will get one FOMC. So for actually that is the rules for big newses. You can't just take any kind of entry after the morning session. You have to wait to close the, I mean the news, when the news will end. After news 15 to 30 minutes you have to wait after releasing the news. Okay, then you maybe you will get a setup. I really don't like to take any entry after the news, because after news, if I see there is a very most of the time I see sloppy price action after big news. Okay, this is my, I mean opinion. So far I understand that market did type of sloppiness. But if you just skip the morning session, I mean all of this sloppiness, then you can easily get a very nice setup after I mean after the AM session, I mean in the PM session. So whenever you will see a big news day, if you wait until the PM session, that will be really great for you guys to get a very nice and clean setup. So I think it's enough for, I mean, for the news. Now I would like to talk about the PDRA. Do you have any kind of question, guys? If you have any question, you can just let me know. I will answer you before going the PDRA. Okay. If you have any question how to buy real time data. Okay, brother. If you actually go to the how to say I mean here, and from if you go to the account and billings, I mean it I have to leave, so I don't want to go over there. If you go over there, you will see a option about I mean how to if you would like to add more data, then you can just add it from there. Okay, so I add data for CME group. So you can actually, if you love futures, then you can add the CME data. Just you have to go your profile from there, account and billings, then you will get it. It's all good. I think it's all good. Okay. PD means premium and discount. George Camarero. PD means premium and discount. If you see this big candle, this one, if I mark the low and high, below the 50% is discount and above the 50% is premium. Okay, so this is the PDRA, and array means the enigma or something like that. So this is the PDRA. Okay, now I would like to talk about PDRA, but before that I want to talk about today's price action. So far I can see price actually trading the lower part of the I fair value gap, and yesterday it failed to go above the swing high, and it also failed to go lower. This is dollar index, and if you just mark this order block level from dollar chart and from the daily chart, you will see still this order block level is actually working. And there is another thing, if you see this candles high and this candle low, this is your fair value gap. So if you just mark the consequent encroachment of the fair value gap, you have seen that market actually traded the consequent encroachment. So far it indicating that it will go higher. I am expecting it will go higher, but we will see how did it trade. Okay, so that is from daily chart. I will go to the hourly chart first. If you see the hourly chart, this is the sloppiness. Okay, all of them are sloppiness. There was nothing, absolutely nothing from today. Okay, there is nothing. Price just went below, take the sell side liquidity from here. It went above, take the buy side liquidity from here, and also it just inside a range. The range is, I mean, I will show it to you. At the lower part, you have this order block level, and at the higher part, you have this consequent encroachment from the weekly I fair value gap. That means price is just inside this range. It it didn't decide which way it will go. So far, depending on our weekly analysis, we know that market should go higher. If it would like to go lower, this is the discount array. If you just mark from here to here, below the 50%, this is the discount. Okay, and in discount, this is the only fair value gap, which is most obvious. So what can price do? It can just go below, take all of the sell side liquidity, trade the hourly fair value gap, then it will expand higher. So that is in my mind. I'm thinking if it fail to break this high, the low of the I fair value gap, I will see that market will go lower. And will I look for a trade entry? Yeah, I look for a trade entry. It's because today I don't have any kind of very trending price. I won't get it today. It's because tomorrow is the news, and whenever you will see there is a news, you can just say actually price will use that news for making a trend. Okay, that's why it's sloppiness today. You will see the whole day this type of sloppiness. You won't see this kind of run. You see this run, you won't see that, or this run. This is also a very nice run from hourly chart. I'll just make it little bigger. You see this run, it's a very nice run. But I hope today we won't see this kind of run. It's because tomorrow we have a very big news. Now if you just go to the 15-minute chart, I'll go first from here. See this price action. What is it? Do you understand? When you will open your chart, so many brother actually commented to my videos in my YouTube channel, brother please do top down analysis or just mark your chart for daily chart, daily chart. I'm doing this, I'm just showing you from daily chart, hourly chart. Now I'm in 15-minute chart. When I opened my chart and it is in 15-minute, I can see market went above to this hourly fair value gap. It just came lower, then it has just made some liquidity over here, the buy side liquidity. It went lower, take the sell side liquidity, this low, it has taken that, went higher, clear all of this buy side liquidity. All of them are cleared by this specific candle, okay? So when this candle actually cleared all of this liquidity, I expect that it should go to this hourly fair value gap. This is not even balanced, this is not even repriced. So as we have a news tomorrow, this is how you will i mean expect, okay? As we don't have any kind of news, i mean we have the news tomorrow, so today it will just make some kind of liquidity to the above. How do it will make liquidity? If you just mark this as your zone, you see, whenever retail traders saw price came here, they sell, they sell, all of them they actually sell. So when they sell, where is it their target? You see this low? This is their target. The retail trader actually this the target for the swing low, this type of. Now you can ask me, brother, why they won't sell over there? Yeah, a lot of them actually will sell there, but when you will take your entry to the 15-minute chart, you won't sell from here to here. You will hold your price until there. I mean this low. That's why you have to be understand that the sellers are in the market and they are, whenever price will go over there they will sell. You see this run, this is a shallow run, and I don't believe this type of run. This is not liquidity taken, okay? This is just swipe liquidity come back. It shows me that it should go higher, the lower, and where it can go this hour. I'm targeting this hourly fair value gap. So this is from the dollar. I would like to go to the Nasdaq. So first, it's because 9:30 opening is very near. And if you go to the daily chart, and I will answer all of your question, brother. Just give me sometimes, okay? Because the 9:30 opening is within 2 minutes. So you see this sloppy price action. This is not clean. You see sloppiness over here. All of these days, where price was slow. They were just making buy side. They were just taking sell side. This are doing, okay. We didn't have any trend. I mean, nice run, market run. Shallow run means whenever you will see this kind of, this is a high, this is the equal high. Okay? So this is the equal high. I'll just mark this. This is the equal high. Shallow run means you will see price will just go little above and then it will break lower. You see, this is shallow run, and the liquidity taken is something like that. I'll just show you. The liquidity run is, you will see it will go higher, maybe you will just trade some there sometimes, then they can come lower or higher, I don't care. But this is the liquidity run, okay? And the previous one was the shallow run. So I hope it's clear, uncle. So it was actually sloping, uh, consolidating over there. I will go to the hourly charts first. And if you see, it's inside the opening gap, and I told you guys you have to keep this opening gap for 5 weeks, at least for 5 weeks. So you have to do it, okay? And now right now price over there, and if you see, price actually clean the buy side also. This was the shallow run. I want to see that it will go higher, little bit higher. Maybe it will clean all of this buy sell liquidity first, then it will go lower, because in low you see this low and this low, they are the relatively equal low. They're very clean. If I see price is going higher, that will be confident for me that the price will use the news to clean this sell side liquidity. So I really would like to see that price will go higher. Okay. So this is 9:30. I will just go to the 1 minute actually. I just need to see how it works. And if you see, actually there is no, I mean, no opening gap. It's very nice. I just would like to see how price actually act at 9:30. It's important. Then I will go back. Okay. I will go with the deeper conversation. So far we didn't have any opening gap range. I mean, the closing candle from yesterday and the opening candle from today 9:30. What is yellow box in your chart? Was that in DXY? In DXY, the yellow box was, I mean, it was the weekly I fair value gap. Tarun, will you trade yes today? Brother, just let me go to the yes first so that you can understand why I'm just skipping yes right now. Okay, just let me go over there. This is E-mini S&P, and if you see, it has actually cleaned this sell side liquidity. Now it is trading this volume imbalance. This is the volume imbalance from, I mean, from the weekly chart. It is already, I mean, very low from the monthly fair value gap. That means it has done so many things. The only one thing is rested over here, and that is this level. This is the water block level from weekly chart. So far I remember, this is the weekly chart water block, and all of this, I mean, the fair value gap. So that's why I am thinking that I should trade the Nasdaq until Nasdaq break this monthly fair value gap. It has already broken the even S&P, but if you see Nasdaq, I mean here, this is the same monthly fair value gap, okay, and price is above the monthly fair value gap. It didn't even go to the consequent encroachment. I expect that market will go lower, and that's why I have so many, I mean, so many things is still over Nasdaq, but where even S&P has already traded I mean the monthly fair value gap, every level it has already traded. Okay, why do you always trade Nasdaq and not currencies? Okay, if you ask me about the currencies, I showed you an example. I mean, maybe the day before yesterday, about Euro USD. Right now, Forex market has so many manipulation. And what I mean by manipulation, if I place my stop loss depending on my analysis, in my opinion, that my stop loss should be here, okay, and price shouldn't go there. Now, if you trade Forex, you will see the price will actually give you the entry. It will just go a little bit higher, then it will stop you out. This is the thing now these days Forex actually doing. That's why I don't trade Forex. But if you really believe your analysis and if you trade future, you will see maybe it will go lower, but it will stop before hitting you, hitting your stop loss, and it will work as tick by tick. If you go to my, I mean, the YouTube channel, you will see I have uploaded a video called, I mean, the easy entry setup or something like that. I'll just show you that. And it just, if you slow your speed from the I mean from the video, just let me show you why I'm not trading, I mean the Forex. If you just go this the easiest setup, just play this video, and it is I just fast forward this video, so you have to go to the settings and make your speed like 50.50 or 0.75. Then you will see whenever price was acting, I write down everything and price was just following my direction, something like that. Okay, then you will understand that forex market actually not that type. I mean, it doesn't want to listen to you. Okay, so when you have a very nice clean price action in Nasdaq or the future market, why do you try forex? I don't want to try trade forex. It's because, yeah, I will trade forex, but it needs to be, in its way again. I mean, before 20, I mean the COVID, most of the people who are now trading forex, I mean futures, they traded forex. They all were traded forex. But then after COVID, everything has changed, and most of the big traders, they actually, I mean, shifted from forex to future market, because now future market is more precise, and here you can just read the price tick by tick. I mean, peep by peep. You understand the peep, so I can say peep. So that's why I trade for, I mean, the Nasdaq future market instead of forex market. You see this level. Let me just show you. You see constant encroachment and see how does it work. Okay, I will show you one more example. Yesterday, I had tweeted to my Twitter account that mark this fair value gap. This one is very important. Want it roll out? I think internet issue. So okay, over here. So if you have remembered this tweet that I told you to mark this fair value gap. I'll just show you. That was the fair value gap, which was very important for me. I told you that, guys. This fair value gap, okay? The candle was 11:37 candle from Wednesday, 4th October. So that fair value gap, it has traded and it gave you so many chance for taking your entry. Even I took a macro entry even depending on this fair value gap. If you have seen my, I mean, the screenshot in Twitter, you will see there was a macro which has actually taken the buy side liquidity just before the macro, but I took that trade, I mean the entry, because I saw this, it has actually traded the consequent, I mean the fair value gap. So that, I think that was this one. Yeah, this one. This just this example. I mean this macro entry. I took it only depending on this travel gap. This is some kind of price action. Okay. So now what I was wanted to tell you about the PDRA. I would like to talk about that now. PDRA. What is PDRA? You see this, like, I'm just giving you an example. Okay, this is not, I mean, not trade signal or something, nothing. I'm just giving you a trade example, I mean the example. So high, this is the low, this is the 50% of this leg. Now right now price is over here. How long price will stay above this 50%? It's in the premium zone. Where it will go to the discount, it will be the discount, I mean the price will be in discount. Okay, so what is the rules? When you will see prices above there, I mean the in the premium zone, you will take sell, and when prices in the discount zone, you will take buy. This is the rules. I think whoever actually trade, I mean the PDRA strategy, you love or you try to follow this. I think that is your rules. When you will say, am I right or not? If I'm wrong, just let me know or correct me. If you have seen the prices in the premium zone, you will take short, and you will see, whenever you will see in it's in the discount and your high time frame analysis, if it matches, then you will take buy. This is the rules. But what I'm talking to you, it's little bit, I mean, different from the condition of the PDRA. I love to take short when it's in the discount. I love to take buy when it's in the premium. Why? If I have seen there is a very nice equal low. For example, if you see this low and this low, just think, I'm not giving you any example. I mean any trade setup. Okay, I'm just giving you an example. I think this will be better. Okay. So if you have seen this low and this low and this low, they all are relatively equal low. So when I have seen this price run and it came just near the sell side liquidity, and then if I have seen that there is a very nice liquidity taken and the market structure shift, I'm talking about the 1 minute chart. though this is 1 minute chart, think this is the 1 hour chart. And in 1 hour chart, I have seen price actually came here to the discount level, and it just before clearing the sell side liquidity. If you come to the 1 minute chart, you will see it's a huge pips. Okay, I mean handle or pips, whatever you love to tell, you can just call. Okay, so when you will come to the 1 minute chart, and you will see there is a very nice trade setup. I love to take that short because this is most obvious. Whenever price is over here, how do I know? I mean, yeah, I know you will tell me the high time frame is always important. You will just read the price from high time frame, then you will know price will go lower. I know, but most of the people, they don't know how to read price. I believe that. Even I also don't. I'm not saying you that I read the price action properly, but I am telling you, you will face lot of problem if you are new when you will start to reading price. So you believe that when market is over here, then it's better to take short, but you will take short when you have the confidence that market will go lower. How many people are there who are confident that he can tell market will go lower? How do you know that market will go lower? I think there is no, I mean, very rare people, they will know understand that market will go lower. That's why I don't want to take any kind of risk whenever price is over I mean above the 50%. I'm not sure that market will go higher or it will go lower. But when I see market is just before the before clearing the liquidity from higher time frame, think here it's from, I mean, the 5 minute chart. And I'll just show you. I think this one is will be enough. Just think, this low and this low are the relatively equal low. I mean, this low is very near to this low. Okay, so when I will see this price turn will just it's going to clear the sell side liquidity, I will go to 1 minute chart. I'll go 1 minute chart and I will look for a setup over here. If I have seen any nice setup, I mean, like here, if you look this setup, it has cleared the buy side liquidity. If you have seen this as clear the buy side liquidity, this is a very nice market structure shift. This is your market structure shift, and there is your fair value gap. There is your fair value gap. You see this candle? When this candle just tap to the fair value gap, I will take my, I mean, just put your stop loss depending on your analysis, and I will put my target is over here because I know market is going to clear this sell side liquidity. So where did I take my entry? Depending on your PDRA, I took my entry in the discount level. In the discount level, I took short. I didn't take entry from there. Why? It's because I need to be more sure that price will go some level which is more obvious. I can say this is more obvious level. Okay, that's why I can take entry in the discount level. Most of the time you will see I took entry, maybe market has gone too high, but then also I took entry. Why? Because just above that I mean the price, there is very nice liquidity. So I know price will go over there, and this big run, this actually indicating that market will go lower and clean this sell side liquidity. I'm telling you guys, this is not a signal or something like that. I'm just giving an example. Okay, so this sell side liquidity is very clean. So what will market do? Market will just clean the sell side liquidity. That is the target. So that is the thinking of PDRA. This is my thinking. I'm not telling you that you just you will follow that. I'm telling you, when price is in the premium zone, I'm little bit confused. This is me, okay? This is not you. I'm confused that market will go higher or go lower. Though I have the, I mean, the high time frame analysis, but I'm confused that market will go higher or lower. So this is more, I mean, remember this water block. It is very important. I mean, this water block will should work better. So when I have seen that market is breaking lower, and it has actually taken some kind of buy side liquidity and gave you a very nice market structure shift. There is a very nice fair value gap, market is there, and now it's very near, I mean, to the cleaning the by I mean cleaning the sell side liquidity. In my opinion, this is more obvious trade rather than taking or looking for some entry over here. And that is one of the things, between all of, I mean, among all of the rules about PDRA. Some of you actually ask me, why do you use the PDRA or something like that. I don't use PDRA. It's this is the reason. I don't even see this discount or premium level. I don't have you'll never see that I have the the PDRA, the premium area or discount area. You will never see that. What we will see, you will see maybe I have marked fair value gap, the consequent encroachment of that fair value gap, or the water block level, consequent encroachment, mean threshold of the water block. So this all you will see in my chart, but I never mark premium and discount area. Okay. So guys, do you have any question? If you have any question, or if my voice is still not understandable, then you can just tell me, and you can ask me anything. Today I would like to talk about talking, I would like to talk with you guys. So if you have any question or something like that, you can ask me. I will try to give you the answer. Why market is doing this? Why it is consolidating over here? Did you see what is the time? You have to remember what is the time. It's 9:45, just before the 10:52. I mean 9:52 10:10 macro. So if you see that this isn't clean before the the macro, if you have seen that, then you have a very nice setup over here in the macro time. That means you will just wait to take the buy side liquidity first, then the market structure shift, you will take your entry, and you don't need to wait. I mean, you don't need to target your profit for 20 handle. You can target your profit to the sell side liquidity. This is the sell side liquidity. So that will, I mean, increase your confident that market will go here if it failed to clean the sell side liquidity before the macro. Okay, or the macro setup. But if it cleaned the macro, the sell side liquidity, then macro has its own rule. But today I'm not doing anything about macro, and you guys will just tell me if it works or not. If it works, then let me know. If it doesn't work, then I'll be happy. Okay, we have, I think, 10 or 11 winnings row in a row. How is going? I'm not sure if you mentioned it, but where do you measure the opening gap from? Like what time or day? Thanks. Okay. Uh, the thing is, if you go to the regular trading hour, today we don't have any opening gap. Okay. I mean, today's opening gap. Okay. We don't have that. I think the 9:30. Yeah. You see this candle? This is the last candle from yesterday. I don't know why it is showing me 414. It should be, 5. 459. The 459 is the last candle from yesterday. You have to mark the closing point from yesterday market closing, and you have to mark the opening time of today's 9:30 opening. Okay, so these two level you have to mark. Today we don't have actually the opening gap. That's why I didn't mark it. It's very small, and I really don't think that it will actually important. That's why I didn't mark. But whenever you will see the opening gap, you will see very very big opening gap. So that is the thing. Okay, and if you are talking about this new week opening gap, you have to mark this from Friday 5 and for 499 candle closing, and Sunday means 6 p.m. New York local time opening candle. The price. Okay, this is the two level. If you have seen that this is a very big, then you have to mark the consequent encroachment, also the 25% and 75%. If you mark this four level in your chart, you have to keep the new week opening gap for okay, then so it's overnight. Yeah, it's overnight cap. Yeah. You need to pay for real time data. Yeah, okay. So in us there was a 1 hour fair value gap price, even though traded above it. Why? Even though it went, why it why did it went lower? Okay, just let me check it. I just removing this one. Do you, if you understand about my PDRA, the PDRA things, just let me know. Okay, if you understand that. why I take my short in the discount and why I took my buy in the premium. If you understand, then just let me know. I'll go to the hourly chart. So here is your hourly chart. Okay, sorry, I should be go to the electronic. Okay. So brother, I think David, in us there was a 1 hour fair value gap, but price even though traded above it. Where is your 1 hour value gap, brother? Where is it, brother? I don't see any fair value gap. I mean the hourly fair value gap above the market price. This is the hourly chart from Nasdaq. Yeah, but what I don't know which fair value gap you are talking about. I'll just make it more specific. So I should I go for the macro? If you think I should go for the macro, then I will go for it. But I really don't want to go for the macro right now. It's like it's kind of boring thing. 5 and 6 a.m. Understand? Okay. Sorry, was cracking and when you were saying times for the new week opening gap. No, what were the times again? For I mean the new week opening gap. It's Friday 5 and Sunday 6. Both of them are, I mean, the PM session. Okay. Sunday 5 and Friday 5 and Sunday 6 opening gap. So if you look closely, this is the gap I really care about a lot still now. If you ask me why, then I will need maybe one night to explain about fair value gap. And so I'll go for that maybe later. When will be the right time, I will go for that. Okay. So this is your buy side and this is your sell side. Market is over here and I have an overall idea. Okay. So I'll go to the 1 minute chart and there is my internet. All you know, I'm in Bangladesh and I'm just facing this. Uh, but I'm happy that we have internet. So there is 10. So what is the rules, guys? Is there any news right now? I don't think so. We have news today at 10. I mean the 10 around 10. And I don't know anything about higher time frame. Okay, just think about it. I don't know anything. So far I have seen that market went lower. That means it has actually cleaned the sell side liquidity and it's going lower. I am expecting a higher run. I mean higher market structure shift. Yeah, I will change my direction. If I have seen that it has made some kind of liquidity over here, then one candle actually take the liquidity, then give me the lower market structure shift. Okay, then I will go for the sell as well. It's because market is very near to clean this sell side liquidity from 15-minute chart. Okay, so this is from 15-minute chart, and I'm expecting market will clear this sell side liquidity. As this is macro actually follow its own rules. There is nothing actually very, you don't need any kind of high time frame analysis or anything. Okay, you just need to, what can I say, you just need to believe the macro price action. So from seen it has cleaned the sell side liquidity and it's going lower, lower, lower. I don't care if it just go lower and didn't give me any chance, because we have 3 more macro today as well, and I think there is no news at all. And now if you see there is a fair value gap, this fair value gap I don't care, because we didn't clear any kind of buy sell liquidity. If you would like to take your short over there, it has to take some kind of liquidity. And if you try to mark above here something, you know for your buy side liquidity, I don't see anything. There is no, related equal high or equal high, nothing. It's just a clean price run. Okay. Manak Singh, bro, you have any video on daily wise? I have a lot of video in my YouTube channel, because previous when I was in Portugal, I every day I have made the daily basis just before the session. So you can just go to my playlist, and from there, YouTube playlist, from there you will find the daily basis video. I have explained how to do that, so you can check that out, brother. But right now I'm in Bangladesh, and actually I have some personal issues. That's why I don't have any time to make some kind of video or something. I'm sitting here in front of you guys, and I'm just thinking I mean, so many problems in my head right now. So that's the thing. I couldn't able to make some video. I need to make a video about market structure shift. Most of you actually didn't understand that clearly, but I need some times to be free first. Okay. So now I can see market is going above. Where will it go? This fair value gap is very, suspicious for me. I will see how it trade this fair value gap. If it can break that, and then just price make a swing high over there, it came little bit lower. Let me just mark it. If I say it just went lower, it has made this as a swing high, then very nice market structure shift with a fair value gap. I will take buy to that fair value gap. But if it just go above, clean this kind of, any kind of buy side liquidity, and then gave me a very nice market structure shift, still now market didn't take any kind, I mean, don't be full. Okay, because market didn't take any buy side liquidity, so you can't take entry depending on the setup over here or your high time frame analysis. Remember this, guys. When price will be inside this four macro, high time frame analysis actually doesn't work inside this macro. This is the place where price take energy for the big run. Okay, now we are at 10, we will be inside the silver bullet. So for ICT told that silver bullet is the heart of the morning session. I mean, the this silver bullet is the heart of the morning session. So before going into that silver bullet, price go through this macro, and inside this macro, it will just take energy. I mean, it's fueling. Okay, so so that it can run inside the silver bullet. That is the thing, bro. I'm facing too much problem in finding drawn liquidity, brother. It's the easiest thing. Okay, just let me tell you. Right now, I'm just trading a macro. That's why I mark this sell side liquidity, but whenever you will see there's some kind of equal lows. Okay, uh, I mean, equal lows or relatively equal lows. I'm showing you from our time frame. You will go to the 15-minute or 5-minute hourly time frame. You see this low and this low. Sorry, they are the relatively equal low. Sometimes you will see the very clean low. If I go to the 15-minute now, just let me little bit. Okay, you see, what is it? It's not there. Oh, there. Just let me show you. Sorry. There is a low. It's loading actually. Okay, there. There is the low and there is the low. You see these two low. They're relatively equal low. You can say they're very clean. You have to mark this type of place. When you will mark this, you will be sure that whenever you will see market is just near to that level, you will see market will trade that, because this is the place where most of the people take buy. That's why this place is very important. So you can just mark the equal low or the relatively equal low for your, the equal low or equal highs, it's up to you for your uh, drawn liquidity. This is the easiest way, brother. Now you can say market actually respecting this fair value gap. It's from 4 October. I mean, maybe from yesterday. Yeah, maybe. Potential buy on SP 500. Let me go to the SP as S&P actually. I'll go over there. Let's see what is it doing over there. It's been time. Okay. So market actually go below, take the sell side liquidity when it was in the, just let me mark it. Okay. So here I'll just move this on. I don't need that one. Okay. So where is my market structure shift? Do I have any market structure shift? I need to check, brother. I need to see. Uh, I don't have any market structure shift over here, brother. There is no market structure shift. I don't see any market structure shift. I'm sorry to say. But what I can say, I mean, this is actually liquidity run instead of, I mean, this is the liquidity run. I think so, brother. Because there is no market structure shift. This is not like depending on you, and I can see this one is actually my market structure shift. MSS. So this is my market structure shift in ES, okay? And this is the liquidity run. If I have seen a fair value gap over there, I'll take I'll try to take short. If I have seen this fair value gap, okay, I'll try to take short over there. I mean, from here to the 500 here. If it just go little bit above, I will just put it above, okay? So if it doesn't give me any chance, I will just skip that one. But so far, I can say this is actually the setup for sell. So uh, potential by the Zevek Dishanks SRLR, please. What does it mean, brother? Mohan Rao. SRLR. What does it mean? I don't understand. SRLR. Hourly liquidity run, something like that. I don't know, brother. So this is my setup for. Uh, what can I say for even S&P? This is not a potential buy over there. It's because you don't have any kind of market structure shift. It doesn't meet any kind of rules over there. So it was actually the liquidity run. Market came here, it went above, take the liquidity, gave you the market structure shift. So now we have a very nice market structure shift over here as well. If you have seen two market structure shift, what is the rules for you guys? Do you remember that? The rule is you have to take your entry to the first fair value gap. I mean this fair value gap, and your stop loss has to be just above the second fair value gap. The consequent encroachment above the consequent encroachment of the second fair value gap, something like that. And you will go for fair value. Now you can say, brother, it's near about like what is the ratio? 0.87, something like that. I don't care. Just skip this one. It's up to you. But if you have to take the entry, you have to follow these rules. The rules is if you have seen the two fair value gap, one just above, the below the another one, you have to take your entry inside the first fair value gap, and your stop loss has to be just above the consequent encroachment of the second fair value gap, because this should be the break gap. So this is the rules, guys. So far I can see this is the thing, and I will go to the Nasdaq actually, so that I can understand what is it doing. So in Nasdaq, I don't see any kind of setup. I, it's because it didn't actually clean any kind of buy side liquidity. Instead of that, that was a very nice big run. Okay, so that's all. High resistance liquidity run. High resistance liquidity run, low resistance liquidity run. Please explain. Okay, high resistance liquidity run, low resistance liquidity run. Let me go over there. Sorry, just a second. Okay, I'll go to the 15-minute chart. Now, this is the dollar index. Okay, look at this, brother. In E-mini S&P, you are expecting that market will go lower. In DXY, you have to like look for a buy run. If you ever see a low run when you are expecting market will go lower, In the meantime, this is also lower. I mean, the dollar index will go lower. Okay, I assume that you are absolutely right that market will go low. You are right. By anyhow, it you are right. Okay, but in the meantime, dollar is also going lower. You will see the low resistance liquidity run. That means it will just consolidate over here. It will go take the buy side liquidity again and again, and then it will just go lower, something like that. Okay, this is low resistance. I mean the high resistance liquidity run. And if you ask me about anything, I mean the another liquidity run is whenever there is a very big news like NFP, CPI, PMI, you will see after the news, you will see the consolidate. Okay, I mean the consolidation, and that will be the, I mean the, what can I say? I'm sorry. আম্মা একটু ওদিকে যাও না, আম্মা ওদিকে একটু যাও. I'm sorry. So that is also, I mean the high resistance liquidity run. So you see this, I have already done my trade over here. If you look at the mini S&P, this is the setup. I mean, if you count this as our winning trade, how many it will be? Ali? 11, 11, I mean, 12 winning trade, no losing. Am I right? Tell me. This one took 5 handle. So that is the thing, guys. And let me explain this one, okay? When it has actually went here inside the macro, I have seen that it has very beautifully, it has cleaned all of this liquidity. This was the liquidity taken first. Okay, okay, I'll just move that on all of them. Okay, I don't trade this macro, guys, trust me, it's too easy to trade. I need challenge, some kind of challenge. Okay, so when I have seen this, I was needed a market structure shift. Now some will say, brother, this is your market structure shift, this is your market structure shift, and this is your fair value gap. So you will take buy. No, you can't take buy. Why this candle is market structure shift? Did it trade any kind of fair value gap over here? I don't see it has traded any fair value gap over here. It doesn't have a swing low, I mean swing high, which is lower than this high on its left. Yeah, there is a swing high which is lower than this swing high on its right. Yeah, there is one. But in its left, there is no swing high which is lower than this swing high. So this is not, I mean, eligible for being a market structure shift. It is not eligible. Also, this is the equal high. All of them are equal high. So instantly, what I will do, I will just move my liquidity run here to here. Guys, just listen it very careful, okay? Because this is the thing of the macro. I just moved my stop loss from here to here. Now I will wait for a, I mean the market structure shift. You see this low, I mean this candle low, it has traded this fair value gap. When I have seen this candle has broken this low, I got my market structure shift already. And I marked this fair value gap for my entry. So I was waiting market will come to this fair value gap and I will take sell. What price did? It came more lower and made another fair value gap, which is over here. This one and this one. Now you can just make this low as your, I mean, market structure shift. Why? Why you will make this low as your market structure shift? Why? The reason is this swing low, which is lower than this swing low on its right. You see this swing low, this swing low, this swing low, lot of swing low is resides just on the left hand side of this swing low. So it has actually made the, I mean the eligibility. So I mark this as my market structure shift. If you mark this one, it is also, I mean you are also right. Okay, so what is the rules for if you have seen two fair value gap in a row? You will take your entry to the first fair value gap and you will mark this gap as your, I mean, just let me write it down. BREAKAWGAP. This is your breakaway gap. That means market won't trade this one before clearing the sell side liquidity. Now it can trade this breakaway gap. How far it can go? You have to mark the consequent encroachment of the breakaway gap, and you have to put your stop loss just above the breakaway gap. Don't just put it to the breakaway gap. Okay, I mean the consequent encroachment of the breakaway gap, little bit higher than breakaway gap. Go for 5 handle, just for 5 handle. We don't care about the risk reward ratio, because how many winning trade we have? I mean 11 or 12 in a winning trade in a row. We don't have any even single losing trade. Then why do you care about your, I mean the stop, I mean risk and reward ratio? If I just put my stop loss over here, just this for example, if I put it over here, what is the risk reward ratio? 4 is to 2. But it is risky. Price can just go above, and it can hit your stop loss. Okay, you will be stopped out. Now this is the level which is logical. I mean, this level is logical. Price shouldn't go above this consequent encroachment of the breakaway gap. And this is not for sure, guys. Okay. Sometimes you will see that market will go above the consequent encroachment and it hits your stop loss. It will happen, but very rare. Trust me, very rare. So when you can just put your stop loss in a place which is safe, that means you don't have any risk. A price will go above. It has traded the consequent encroachment of the breakaway gap, then it go back and hit your, I mean the, what can I say, this profit target. Okay, so still you have got 5.25 handle. If you put it here, I mean here, still you will get 5.25 handle, and your risk reward ratio is 3.5. Do you understand my, I mean the logics? That is my logic. I don't believe in, I mean, I really don't trade depending on risk reward ratio, because I put my stop loss in a place where price shouldn't go. Because this is the thing, if price go and hit me, I will take the another entry and I will recover my loss. Guys, I gave you so many example when I took a loss and I just mitigate my loss. Okay, so this is the time for, I mean, reply to question. NQ knows high resistance liquidity run, low resistance liquidity. I think high resistance liquidity run and low resistance liquidity run I have explained. You understand? I think so. NQ no setup. Yeah, today it didn't have any setup. And this is the thing, guys. If you have any option, you will just open both of the chart in your, I mean PC, the E-mini S&P and the Nasdaq chart, because whenever you will see there is no setup in one pair, I mean in one future, like E-mini S&P, you will get a setup in Nasdaq. So you can do it, though it's up to you. Okay. So, and how to identify bullish or bearish order flow? Brother, if you would like to understand what is the order flow, you have to go to the daily chart. This is the only way to understand the order flow. And if you come over here, just let me clean all of this. So if you come over here, so far we can see our order flow is bearish, because this is the place where market is actually trading. আম্মু আম্মু দরজাটা আটকানো, চেঁচাচ্ছে কেন এরম ভাবে? I'm sorry, guys. Shit. You have seen this volume imbalance. Price actually went over there, then price rejected. Okay, where is its destination? This is the water block level from weekly chart. We all know that we have done our top down analysis from monthly chart, weekly chart, daily chart. That is how you will understand what is your order flow. Our order flow is bearish, though we will take buy. No, it's though we will take buy depending on price action, but most of the times whenever we will see the lower price action, I mean that there is setup for taking sell, we will take our highest lot size to take sell, because our order flow is bearish. So if you would like to understand the order flow, you have to go over there. That is the thing, brother. That MS you pointed out is a valid MS cause it wicked into a fair value gap. Yeah. Blotoloto, who is who is I mean who is market structure you are talking about? Are you talking about this one? If you are talking about this market structure shift, it is valid. It's because it has traded this fair value gap, so it is valid as well. Okay. So if market just came here and then make a fair value gap, it retraces over there, I would take my sell over there. But instead of that, when market came lower, I marked this one because it's easier to, you see, if I just put my MMS, it's in just middle of the two candles, so it looks better. That's why I put the MMS. Okay. uh, the one from before on ES. Before on ES, can you just tell me uh, in DXY? I don't know, brother, what are you talking about? I mean, I'm not sure, brother. Uh, just make it clear. Top MSs I'm asking about. I think, yeah, okay, okay. So this one. Okay, I got it, brother. Thank you. So then, how to identify breakaway gap or fair value gap? Mohan Rao, I have already told you. Okay, if you have seen, like you are waiting for entry. Okay, you are waiting for entry. There, we were waiting for entry. It's because we were inside the macro, and we have seen that it has cleared all of the buy side liquidity, then gave us the market structure shift. In the meantime, we had two fair value gap. One is here and another one is here. Okay, just think like that way. I'll just move this one here. You see, one more candle. Okay, so two fair value gap. We have one fair value gap here, one fair value gap there, and we are expecting to sell. This is the thing, we are expecting to sell. So this fair value gap should be traded. This fair value gap should be used as a breakaway gap. Most of the time you will see market even didn't go to that fair value gap. But if market has energy, then sometimes, but very rare, it will go to the consequent encroachment. That's why I put my stop loss just above the consequent encroachment of the breakaway gap. So it should be opened if market would like to, go lower. So is it clear, brother? Just let me know. Okay, this is how I mark my breakaway gap. And yeah, breakaway gap is also a fair value gap. It is also a fair value gap, but this fair value gap is for entry. This fair value gap is for not, price shouldn't go there because that is the breakaway gap. So this is the thing. I hope it's understand. I mean you understand that. Yeah, but you can say later it will, trade this breakaway gap. Later it will be useful for trading. But when the setup was over there, I wasn't, I wouldn't like to take that into. Okay, I wouldn't like to see that price trade that breakaway gap. So how to identify bullish or bearish order flow? I think I have already gave you the answer. Mm, in US 30, we can short from US 30. What is US 30? I think it's Dow. I don't trade Dow because Dow is some kind of barometer like DXY. We also don't trade DXY, when dollar index. We just use them to understand the order flow. Okay, short from 1005 February, right? We still have sell side liquidity below. Brother, I just don't trade Dow because this is some kind of, I mean like liquidity taken. Okay, this is some kind of indicator, you can say indicator. So Dow is kind of indicator for understanding the Nasdaq and even S&P market. No problem. বলো তো, but the one from before the one is the, thank you. Okay, awesome, thanks. You're welcome, you answered already. Thank you, brother. Thank you. Cheers, cheers, cheers. So anybody has any more question? If you don't have any question, then I will go little bit, I mean yesterday's price action, because yesterday there was a macro entry. um, Considering current order flow, where will you consider as MMS for upside? Okay, let me check it. Uh, Let me go from, I mean, are you talking about yes or Nasdaq? Can you please make it sure? Just let me know what you are talking about, okay? It's better for me to talk about Nasdaq because I really am interesting about Nasdaq right now. So if I go to the Nasdaq, then it will be helpful for me to easily explain you. So just let me know, okay? Which pair you would like to know. So in Nasdaq, you can see there was actually no entry over there. If you go to the 15-minute chart, it has actually cleared the cleared the sell side liquidity. So my next target is this, the opening gap and the consequent encroachment. Okay, this is my next target. I don't want to see price will go higher. I mean, right now we have a water flow for, I mean, for sell. Okay, this sell side liquidity is sorry, this sell side liquidity is more obvious than price going higher. Okay, I would like to say it will make some kind of fair value gap over here from 15-minute chart. It will trade a little bit, just a tap, okay? Then it will break lower. It will break the sell side liquidity. Also, the consequent encroachment of the opening gap from where it was from Wednesday for October. I mean, from yesterday. So it will go over there. That is my thinking. I do not want to see market will go above this fair value gap. I mean, this little 1 minute fair value gap. I don't want to look price go above that one. It can go to that fair value gap, but I don't want to see in 15-minute chart price went above the the this fair value gap. Okay, so this is the fair value gap from 5-minute chart. I you just mark this order block level. This is very important. This is very important. So before clearing the sell side, if you see any kind of higher run. Now, brother, you told me that how can I understand that where market will go? Now, listen this very carefully. Okay, this is the thing you should understand. I am expecting the lower price. Now, when I will see a higher price, what will I do? I will just mark every level. If you see 5-minute chart, this is just 5-minute chart. Okay, there is a fair value gap. This is the first place where price could go, then reverse. There will be a, consequent encroachment of the fair value gap. So price can reach to the consequent encroachment, then order block, then this gap, then that, whatever, just above. I will just watch from where price will go. It will return. Okay, I won't take any kind of buy. Why? It's because from high time frame we know market should go lower. That is how you will frame your work. The trade. Okay. Now, if you have seen that market is going lower, you took short, now you would like to take buy. If you do that, that is gambling. That means you actually want to take every run. Every move you would like to catch. And that is nearly impossible, brother, because after sometimes you will see you took a winning trade and the very next trade you took a loss. And then you will take another entry to mitigate your loss, you took another loss. That is the thing happens always if you just i mean try to take every run. You have to read the price when it will go higher, because from higher time frame you know price will go lower. Why? This is your sell side liquidity. This is the opening gap from yesterday, the consequent encroachment. So price will go through all of this and it will clear the sell side liquidity. Do you understand? That is the thing. Now, price can go higher. I'm not telling you that price won't go higher. I'm not telling that. I am telling that if price would like to go higher, I will mark every level where price can go and stop. My last opinion is the consequent encroachment of the water block will be the, I mean, there will be the whenever the price will be there, price will stop. Then it will come lower. If I see that it has also broken, then I will think, Okay, maybe this is the time to take a buy. Is there any equal highs very near? If I have seen a very nice equal highs or some kind of liquidity, I mean imbalance like this, then I will target that. But before targeting that, I need to break every kind of, I mean, every kind of specific place which can hold the price to send it back to the pavilion. Okay, is it clear? So let me know if you have any more question or not. Then if you don't have any question, then I'll go yesterday's price action. And I'll talk about an entry which actually happened yesterday. And you asked me to how to actually I took that on I actually took my funded account. It's because I didn't trade funded account for 2 weeks. And if you know, if you don't trade for 4 weeks, then you will be just terminated. So I just take a very small, I mean, where was it? I think it was here or not. Do you remember the volume imbalance one? I took my entry to the volume imbalance. Do you remember that? I think it was here somewhere. Just let me find it, okay, brother. I for yeah, got it. Okay, so here I'll just move all of them because I don't want to be lost again. So I'll just move it, okay. So here was the trade. Guys, I don't know. Some people actually don't understand the macro still now. What, why they don't understand? It is the easiest thing. I even don't trade macro. Trust me. Yes, very rare. When I just need to take an entry, I just take entry to the macro without analyzing. I mean, without doing any kind of analysis. What happened? Come here. Okay. So that was the macro. I mean, 1050 to 1110 macro. Now, when price go inside the macro, it was started to going higher. Now you see this candle, you will read every candle, okay, okay guys, just remember it. Let me make it bigger. Okay, here you have to read every candle. Just when price go inside the macro, one by bull candle, the second bull candle, then the, I mean, the black candle, okay. When this black candle took this sell side, you see this swing low, there is liquidity just below every swing low, there is liquidity just above every swing high. You have to remember it. You have to, guys. So when price just go below this liquidity, I marked it as my sell side liquidity taken. What I'm expecting now, I'm now expecting a higher market structure shift. When I'm expecting a higher market structure shift, already I have noticed where is my swing high. If you see, this is a swing high, okay, this high, this is a swing high, but it doesn't feel the requirement to being a swing high, I mean eligible for the market structure shift. But if you look at this high, it has traded this fair value gap. I mean, just let me mark it. This is a fair value gap low, this is fair value gap high, okay. So it has traded this fair value gap and this is the swing high, okay. When I have seen that, I just marked it as my market structure shift. I just mark it as my market structure shift. I mean, I just put it like that way, okay. Then this candle, market went lower, again lower. When you have seen this candle, did it take any kind of buy side liquidity? No buy side liquidity, nothing. It was just traded lower. It has made relatively equal low. Let me mark that. Every candle is important here, guys. I'm telling you, every single candle, it's very important over here. You see this low and this low, they're relatively equal low, I mean almost same, okay. So this sell side liquidity is no important for me right now. I have seen this relatively equal low and I have marked, when this candle go below this sell side liquidity, I marked it as my sell side liquidity taken, okay. And then I got this bull candle. When this candle went above this swing high, is it my market structure shift? No, it is not my market structure shift. Why? Because this swing high is not eligible for being a market structure shift. But there was a fair value gap. I will just mark it because later it will be needed. So there is a fair value gap. And the very next candle, this candle actually shifted the market. Okay. When I have seen it has market shifted the market, I was waiting for the next candle. I was wanting that it will trade this low or it will make another fair value gap over here. If I have seen that there is another fair value gap, I would take that my entry to that fair value gap. My stop loss would be just below the consequent encroachment of this fair value gap. Do you understand, guys? This is very simple logic. There is nothing, no high time frame analysis, nothing. You have to just go to the 15-minute chart. It's because you need some kind of direction. I mean, 15-minute swing high, 15-minute swing low. That's all, nothing else from 15-minute chart. So when I have seen this fair value gap and the very next candle, it didn't make any, I mean, the fair value gap. There is no fair value gap. But if you look closely, I'll just move this. I mean, I will remove this fair value gap. There is a volume imbalance. It's very little. And if you guys watch that, I just, I mean, posted this screenshot. I wasn't able to record this because I took it from my to my funded account. There was a very nice volume imbalance. Now you can ask me, brother, what should I do? Should I go for the volume imbalance? I will tell you no. You will wait, trade this fair value gap. It's because you don't know when this volume imbalance is important. Sometimes you will see the volume imbalance over here, and there is no fair value gap, but there is a fair value gap, but there is a nice, very nice volume imbalance. What will you do? You will just take your entry to the volume imbalance, and then maybe you will put your stop loss somewhere here. You can be stopped out. It can happen, okay? So just forget it. That was the volume imbalance. What price did? It actually traded the volume imbalance, then expand higher. It didn't need to go to this fair value gap. Why? Because it has already traded a place where is more liquid, I mean more inefficiency rather than this fair value gap. This is the, I mean, uh, this is the thing, okay? Brother, I am just struggling with this. I don't know how to fix this. But if we consider change in state of delivery for NT, we don't consider MMS, right? What do you mean by David? That I didn't get your question. Can you ask me again? I told you that in macro we have only two rules. First rule is we have to take some kind of liquidity. Second rule is there should be a market structure shift with a very nice fair value gap. That is the two rules, nothing else. If I have seen liquidity taken and then very nice market structure shift with a very nice fair value gap, I don't care about anything else. I will take my entry over there and I will put my stop loss depending on my strategy. So that is different thing. I will just put my stop loss. I will stop when it will trade 20 handle in Nasdaq, and if it trade, if you're trading, I mean, in S&P, then you will stop at 5 handle. That's all. So there is nothing else. Just this is too simple. Okay, so market structure shift, market structure shift candle close or sweep also considering. I mean, if Mohan Rao, if you are talking about this, you see this run, this is a very energetic displacement, okay? So if you had seen this type of run here, I mean this Mickey Mouse move here, and it has shifted the market, I won't take my trade entry over there. I need some kind of displacement, the very big run after clearing the liquidity. I need that. So diversion, okay, change in state of delivery entry technique is what I'm talking about. Change in state of delivery, brother. I really don't know what is the change in state of delivery. I mean, are you talking about some kind of, uh, I mean, price was bearish, then it started to go up. I mean, it has changed its direction. Are you talking about this? You don't need to think about that, brother. I mean, I don't know what you actually mean to say by that change of delivery. You really don't need to think about that. If it's inside the macro, you really doesn't need to don't need to understand this type of complicated, I mean, this type of things. Okay, it's just simple. Price will takes liquidity, it will give you a very nice market structure shape. What I mean by very nice market structure shape, there should be a very nice displacement, very energetic run with a fair value gap. That's all, nothing else. Just these two rules, nothing else. And you will take your entry, you will put your stop loss, you will stop when it will go 20 handle or I mean 5 handle. That's all. And David, if you are talking about changing state of delivery entry, uh, I really don't know what is that technique, or maybe something, but I really doesn't don't need that on when price is inside the macro. I told you it when it came to the macro. This is the ending macro for the silver bullet. I mean 1050 to 1110 macro. This is the ending macro. So there is lot about macro which you will understand, but it will take time. You have to stay with me. I mean, you can stay with me because I can't tell you everything today and you will understand everything today. It won't be happen. Nobody can learn that way. You have to see or watch the market almost every day and how to do, I mean, marking every important level. I remember I took I why I marked this fair value gap, and I told you that this is important. Just let me go over there. Why I told you that, guys? Do you have any idea? Nobody asked me why this one is important. Now, if I have seen that there is no one who is interested to learn, then how can I tell everything? I mean, like this information is not important for me, but maybe this information is important for you. So that is the thing. If you don't understand anything, if you don't ask me, I will skip that. This is not really, this is nothing to me. I don't care about this fair value gap because I know why this fair value gap is important. This is very simple for me, but maybe it's for you, it's very, I mean, it's difficult. Maybe I'm not telling that you won't understand. It could be, I mean, what to say, I don't know. So what about with the left chart at 10 a.m.? At 10 a.m. we had the news yesterday. So far I remember we had the news, so we didn't have any entry at 10 a.m. I mean the 10 macro. We had three entry and all of them were winning. So far I remember. And I think if you are with me in Twitter, I outlined them like I did the macro entry in front of you. So I did the same thing in my Twitter. But at 10 there was, I mean, the 10 there was a news, some kind of news, I don't remember, so we didn't trade that one. And if you are asking me about the this macro, this is the starting of the silver bullet zone. So this macro actually take the fuel, silver bullet use that fuel, and the last, I mean the 1050 to 1110 macro actually that is kind of, I mean, burn oil, or you can say burn mobile, something like that. So it is useless. So this is important. Silver bullet use this importance and then throw it through, I mean price through the using, I mean, dustbin. It just throw it to the dustbin to using this macro. That is the thing, brother. So now I will talk about this fair value gap. Why this fair value gap is was important for me. There are a lot of fair value gaps, but why this fair value gap was important for me? Okay, just let me tell you this one. You see, this is the lunch macro. I mean, lunch hour, 12. At 12, it reached to this, I mean, opening gap lower level. Before this, there was a very big run. You see this run? That was a very big run. Before this run, we had a very nice consolidation over there. I'm talking about depending on, I mean, so many things. So I will add step by step. You have to, if you don't remember, you can just write it down. I don't know how will you will keep this remember, but if you have seen this in your heart, then you have to understand it. This is 11, I mean, this macro has price went higher, take this buy side liquidity. Came lower, traded this fair value gap. You see this fair value gap. When it has traded that, you see the reaction before. Whenever it traded the fair value gap or volume imbalance, it went higher. It has traded this fair value gap, it went higher. It has traded this fair value gap, it started to consolidate. Do you understand? After the macro, every fair value gap was respecting. It was just taking in and going. It reached to the fair value gap, it went above. This is the first fair value gap where price came and started to consolidate. When it has started the consolidation, then I got this displacement. What price should do now? It should just trade this fair value gap and expand higher. What did it do? It break through this. You see, it has broken this fair value gap, went lower, take all of this sell side liquidity, went above to use this as a I fair value gap, failed to use as a I fair value gap. That means if it act as a I fair value gap, then this candle should be a bear candle. This run should be in the lower part, but instead of that, it has just used the fair value gap low and gave you the highest run. You won't see this run after macro, except this one. When this run has happened, depending on this fair value gap, you see this fair value gap. After that, it came back to this fair value gap, and now it traded this fair value gap, went higher. I am now marking this as a important fair value gap. Now it is important for me. Do you understand why? Now look at the price. You see here, it came above, tried to go higher, failed, break. You see the break? This is the break. I mean, one run. Just break this fair value gap, use this as resistance, went lower, take the sell side liquidity. It tried to go above again, use this as a fair value gap, trade lower, take the sell side liquidity. One more time, it went lower, it failed to take the sell side liquidity, went above. Do you see any kind of, the bear candle over here? Guys, is there any noise? Because my neighbor, they are actually screaming. So if is there so much noise, let me know. I will try to, what can I do? I don't know. Do you understand what I'm talking about? Do you understand? Or the noise is very, irritating? Just let me know, please. That will be really get helpful for me. Then I will continue, okay? Just let me know, okay? I will continue. Just let me know. So if you see this run, this is also a very good run. I mean, there is no. Do you see any kind of bear candle? Any kind of bear candle in this run when it was trading this gap? Now, from here, do you understand the logic? Nobody asked me why, brother, this fair value gap is important. There was a very nice fair value gap over there. I mean, that fair value gap was better than this fair value gap. Then why this fair value gap is not important? Why this fair value gap is important? Because after macro, whenever you see price traded the fair value gap, it went higher. It gave you the, the what can I say, the run. But this before this fair value gap, before this run, this is the last fair value gap where price came, started to consolidate, then gave you the run. You mark this fair value gap like little bit, okay, not that long. You just marked it that way. You are expecting whenever price will come to this fair value gap, you will expect this type of run. But what it did, it went lower. Where will you put your stop loss? Maybe lower this, just below this swing low. Maybe you, if you're more conservative, you will put your stop loss below there. You won't place your stop loss over there. Don't say me. I won't believe you. If you tell me that you will put your stop loss, your entry is over there, you will put your stop loss over there, I don't believe you. You will put your stop loss just below this low. Maybe this swing low. Maybe. But most of them, most of you, or including me, I will put my stop loss below there. What price did? It just came down, take all the liquidity from there, then gave you the run. You see this run? Very energetic run, very energetic run. Then this fair value gap is using like it was using before. Okay, it started to getting importance. Okay, now when price came here, I'm expecting, like, just think, I'm expecting for buy. What I need, when I have seen it has come here, I just need a market structure shift. If I would see a market structure shift, I would take a entry, I mean buy entry here. Instead of giving me market structure shift, what it did, it just go through this fair value gap, this fair value gap, brother, this fair value gap. If you see this, this is the same thing. I mean, this fair value gap also did the same thing. Later you won't find this one because the consequent encroachment of this fair value gap is important, I know, but this is I mean more high price action. I don't want to talk about that. Just understand this. How do you mark this fair value gap? So this is the rules. Okay, you have to follow these rules. I don't know how will you keep it in your mind if you don't write it down or something. I don't know if you don't take notes or something. So when price go just through this, I don't care. It has also traded this fair value gap. If you can say, but it has actually traded that value gap, then went lower. I don't care about that. That fair value gap, I don't care. I'm just watching this fair value gap. This was inside the macro, if you have remembered, and this candle was at 149. It has cleaned the buy side liquidity, then gave me the market structure shift. I took entry over this fair value gap, if you have remembered, and my stop, I mean the target was 20 handle, whatever, it was a winning trade as well. But if I didn't see this fair value gap over there, I wouldn't take that entry. I never would take that entry. I mean, I didn't take it to my account or something. I just marked it in Twitter. If you, any of you were in my Twitter, you know already that I marked it as my macro entry. So that was the reason, because I have seen it actually went to this fair value gap. It has cleared all of this buy side liquidity. So this should act as a I fair value gap right now. It has act as a fair value gap before. It has broken the fair value gap. It should act as a I fair value gap now. Here it gave us, I mean, two time it just it just went below. I mean, first time I took entry here, like thing like that way. Okay, when I take entry, buy entry over here, it stopped me out. When it went through this fair value gap, I took sell here, it stopped me out. It didn't even use as a fair value gap, not even as a I fair value gap. It didn't do, it deceive us. Okay, so when it happens later, it used as a fair, I mean fair value gap, normal fair value gap. Now when market went through this, it should act as a I fair value gap. You you see it, just how beautifully it worked. Now when it went through this, I was waiting to reach it on the fair value gap to take my entry over there. But unfortunately, I mean, we didn't have, maybe, I mean, we didn't get any chance to take entry to that fair value gap, but we had the, I mean, the macro entry. I mean here, macro entry to the PM session. I mean 250 to 310. We had the macro entry, but we didn't get any chance to take entry over there. Now market went above too much time. Okay, and now look at here. What do you see? When price came here, what it did? It went lower. Did it went lower, brother? When price came here, where did it go? Boom. What I was expecting here, it should come here. If it can come here, I will take a buy. What I will expect now, it has already traded as a, I mean the fair value gap. Now what I will expect, I will expect this gap should act as a I fair value gap. Let's see. Let's see, brother. Let's see. I'm expecting this should, it should use as a I fair value gap. What do you see? Boom. Do you see? Where did it go? To this fair value gap. Boom. Now look at the price now. All of the price action. Here you get deceived. I mean, what is the English word of that? I don't know. Some kind of, you thought you took a buy, you will take buy, it actually stopped you out. You take sell, it stopped you out. Later it act as a I mean, it gave you an buy setup, gave you sell setup, gave you buy setup, gave you sell setup. Now, how long it will work? This will be your question. How long it will work? Just let me little bit higher. I mean, from here. Brother, what is this? This is buy side imbalance, sell side inefficiency. That means we need sell side. We got that sell side here. Now, what do we need? We need some kind of, I mean, uh, I mean, rejection, okay? Some kind of rejection. We got that rejection here. So this buy side imbalance, sell side inefficiency is now balanced. Whenever we got this is balanced. Price shouldn't go into that, I mean, price range and then consolidate over here. If ever price come to this point, it will go through this. It is the rules. If you see price came here, it will go through this or it will just leave that area. That's all. It won't go inside the fair value gap and then you will see consolidate nothing. You won't see that. If you see this sell side liquidity, I mean this is balanced, okay? Now here, this is the sell side imbalance, buy side inefficiency. What do we need? We need an buy side. Here is your buy side. What do you need again? You need some kind of rejection to the top level or the consequent encroachment or to the down level or the from the consequent encroachment. Wait, wait. What do you see? This is the rejection. Now this one is sorry, this one is balanced. This sell side imbalance, buy side inefficiency. This gap is balanced now. Why I keep marking these two? Because this is important. I told you about everything. Now it is just going to balance, rebalanced, making imbalanced, and going to make it, I mean, balanced. This is happening over here. This is the fun part of trading, guys. This is the part you have to understand. Now, if you look at over here, it just came, gave you one candle, the very next candle, it break this balance. That means there is no inefficiency. Now, if price came here, it doesn't need to balance anything because there is no inefficiency. Now you can remove this one. You don't need this one anymore. It has done its job. Boom. Do you understand, guys? Now let me know. Just let me know. Okay. I'll go to the 1 minute chart because we have another macro right now. So where was my sell side? There was my sell side. So far I remember. I'll go to 15 minute first. Yeah, there was my sell side. Market has taken the sell side. I told you that I'm not looking for buy. I'm looking for sell. It went lower. Now I'm inside the macro. I will see now, okay? If you see what market did so far. Okay. When price came into the, I mean, the macro, it has actually took this liquidity. This is how you will mark. It has taken the liquidity. Now what you are expecting? Market will give you a market structure shift. Where is your swing high? There is your swing high. It should be shifted. This is now you are expecting. Now what else it can happen? It can give you this kind of Mickey Mouse move. Maybe go above this swing high and give you a very nice market shift over there. And there is a fair play. What will you do? You will take your sell over there. These are the rules, brother. Oh man, I'm tired. Today I was just like going here and there, and it was raining. All the rain was in my, I mean, on my head. It was a tough day, guys. Yesterday as well. So now, did you get your market structure shift? I get my market structure shift. What I need now? I need fair value gap. Do you have any fair value gap over there? I don't see any kind of fair value gap right now. So what is that? That is the market, the liquidity run. Okay. Right now, I'll just put it right that way. If market can go above that, I will take my buy. If it is able to make any kind of fair value gap. Okay. Otherwise, if I have seen it has actually went lower, and where is your swing low which is eligible for being a market structure shift? This low. You see this low? Only there is one low. This low is eligible for being a market structure shift. There is no other. The swing low. Okay. Now, if I have seen that a very nice run down, this way, and shifted the market structure shift with a, shifted the swing with a nice fair value gap, I will take sell. I will just change it to my sell side taken, and that's all. Okay. This is the thing. Uh, in my opinion, this is the easiest thing. Okay. But if it's still you are confused, you can ask me the question. Now I'm in the macro. I don't have much to tell. So if you have any question, you can ask. And guys, the thing is, if anyone, any of you, if anyone push the button for real money, I will think that you are not my brother. And I will pray that you will never learn this concept. If any of you just push your button depend on my analysis, or depending on my everything I'm talking about here, okay? Anything. So you will be responsible for that, and I will pray you will never learn this concept, and you will be in loss always. If anyone just take any kind of risk with real money, it's because if I can know that you are taking risk with your real money, it will make me, it will make, I will be distracted. I will take so much pressure because someone is using his real money depending on my analysis. I will be in a very conservative. um, I think you understand. Okay. So that is the thing. Right now we have nothing. We took the sell side liquidity, we took the buy side. I'll take market as a buy side liquidity. Okay. And I will clean this market structure shift. So far we can see we have sell side taken, and we have the buy side taken as well. We need a market structure shift. That's all. If you would like to mark this high as your market structure shift, that is eligible. Only this high now. No other highs. I won't count any other high. That high is only high which has traded this fair value gap. So that is eligible for shifting market structure. And if you look at the lower part, this is only low which should be shifted. So because I sure was about to buy, thank you for the effort, bro. You're most welcome, David. Thank you, brother. Brother, yeah, I hope you all are, you get bored by my lecture. Long time talking, talking, talking. I'm sorry, brother. I don't know how to make it more, you know, easier to understand. So I'm trying. Okay. Don't think this is your market structure shift. This law isn't eligible for shifting the market structure shift. It didn't trade any fair value gap, or it doesn't have any swing high on its left or swing high on its right. Okay. So this is not your market structure shift. This is also a liquidity taken. Okay. This is also a liquidity taken. If you mark this as this a liquidity taken, until this low is broken, you don't have the market structure shift. This is your liquidity taken. Try to understand the logic. Okay. Now if you see market actually make a very nice fair value gap over there, and then it has traded this fair value gap, then went lower, and you think, oh, I missed the trade. If I mark this as my market structure shift, I shouldn't listen uh, that guy. So I should have taken my entry over there. You can do it, but most of the time you will see that market will go higher and stop you out. Trust me, it will do. This is my experience. So that's all. We are bros for life now. This is my world. Oh, brother, thank you, brother. The 30-second time frame, I and time frame is more clear. Brother, actually 30 minute, I mean 30-second time frame, I really don't go to the second chart, as it's because in second chart, I mean, yeah, I know every time, I mean, the price fractal or time fractal all are same. I know that, but most of the people they are not able to go to the 30-second chart. So if I give any example here, I mean, if I go to the second chart and give you an example, you can't even go to your chart and do it by yourself. So I mean, if you are not a paid membership of this trading view, then you can do it. So I that's why I try to skip the second chart. Instead of that, I 1 minute is my last. So I'm gonna give you some wrong direction, okay? Now I'm gonna give you some wrong direction so that you guys you won't be able, I mean, you won't dare to take entry. I'll say some wrong direction. I won't say you when I will tell you the wrong direction, but I will tell you the wrong direction. That is the thing. Now, who would like to take this entry? If any of you would like to take this entry, you can take. I don't care. I'm using the paper money. If I take a loss, I don't care. But if you take the loss, you will take the real money loss. Okay. So it's up to you. If you'd like to take, you can take. I don't care. Dada, আমি শিখেছি. Uh, Bimanji, Baba, how are you, brother? Welcome back. So for what did we see? I mean, what we have seen. It has taken the buy side liquidity. It has taken the sell side liquidity. It has taken the sell side liquidity again. Did it give you the market structure shift? I don't think so. Still, you didn't get any market structure shift with a very nice fair value gap. Not even in the lower part, not even in the higher part. So what is the rule? In the macro, there is, I mean, there is no high time frame analysis. There is nothing. You have to just depend on the, I mean, liquidity taken and the market structure shift. Any of you guys can just check the E-mini market. I mean, what is it doing actually over there? Any of you? Is there any nice setup or something like that? Can anyone tell me, please? I don't want to shift my chart because I'm expecting a setup. It's because the last macro didn't get any setup. So I think we'll get a setup over here. It looks like it's going up to the middle range. You mean the opening gap middle or something? Also, you are talking about E-mini S&P. This is my world. You are talking about E-mini S&P. So that is the last line where we will wait to get a market structure shift. If we see any kind of market structure shift before this line, we will look for entry. Otherwise, we have nothing to do. What did you see so far now? You see, it has actually made the equal low. You can mark this. One of my brother asked me, how do you mark your drawn liquidity? This is your liquidity, brother. You see this low and this low, they're relatively equal low. One of my brother actually told me that how do I mean, they told me to show me the thing I marked, okay? So I marked this as my sell side liquidity. This is first partial, buy side liquidity, CE, IO, FED, measuring gap, and then MSS, market structure shift, mean threshold, order block, PM high. This is also important. When I will go much deeper, you will understand what is PM high. PM low, sell side liquidity SMT, and want to see unfilled. Now you see this is the sell side liquidity. This is your buy side liquidity, brother. This is for you, okay? Yeah, I don't remember the name. You asked me how do you mark your DOL? Drawn liquidity. This is your drawn liquidity. If price go above, it will clear the buy side liquidity. Both of them are now attracted. Price can go anyway, okay? All of this liquidity is not valid now. I mean, I'm talking about this depending on, whenever you will see this kind of price action outside of the macro, you will think like that way. When you will see there is a sell side liquidity, there is a buy side liquidity, and price is just hanging around inside both of them, you won't take any kind of risk, okay? So what can happen? Price can just go below the sell side liquidity and started to go lower, or it can just go to the sell side liquidity and then give you a very nice market structure shift. You will take your buy over there. This will be your target. So this is the two thing. If you see it went lower, cleared the sell side liquidity, and then started to go lower, you have nothing to do. But if you have seen it went and clear the sell side liquidity, then gave you a very nice market structure shift, there is your chance to take your entry. The buy side liquidity is your target. After 10:50 and 11:10 macro, what will do we wait for even? No, brother. I didn't talk about 11:50 till 12:10 macro. Even not even. Yeah, you have to wait until 150 to 210 macro. Every day we have four macro, right? 9:50, 10:10 macro, 10:50, 11:10 macro, two macro in the morning session, two macro in the PM session. 150, 210 macro, 250, 310 macro. So you have four chance to take entry. Like yesterday we got three chance and three were like winning trade. Today we got one in mini S&P, though in Nasdaq there was no chance. I think right now we don't have any chance in mini S&P as well. So that is the thing, guys. If you have get any chance, you will take entry. Guys, I told you this is the easiest one, and this is for the baby. The under 18 people. Whoever who are under 18, they will take this type of entry. It's the easiest one. There is nothing to understand about price. But I really want you to understand the whole price action. Why prices were going over there? When you should take your entry? Why this fair value gap is important? When it will act as a fair value gap? All of the thing. When you will put your stop loss just above the breaker mean threshold, or consequent encroachment. All of this thing. Okay, this is the thing I would like to share with you. So now guys, tell me, do you have any kind of question or something? Because after this macro, if you don't have any kind of question or anything to see, I will just, I mean, I will close my streaming for today. So far, I was trying to talk about the news, and from today, I mean, from PM session, we won't take any kind of entry. This is the rules. If you just do practice these rules before going to your live money, it will help you to be consistent. Trust me. If you just skip and just think, okay, let me take a chance, okay, maybe I'm doing paper money, I don't care, so I'll take a chance. You will do the same when you will be in the real money. Trust me, guys. That's why I'm telling you, you have to follow the rules. You can't take any kind of entry from PM session to until the morning session tomorrow. I mean, until the news release. After releasing the news, you will wait for 15 to 30 minutes, and then you will start to look for some clean price action. This is the thing which is not clean. Now, all of the people will think it will go high, they will take buy. People will think it will go low, they will take low. What is this? This is consolidation. This is sloppy price action. I want something like this. You see this? Very nice. Boom. See this? Very nice. Boom. Boom. You will wait for this kind of price action, not this. You see, what is this? There is your sell side liquidity, there is your buy side liquidity. Now, when price is going over there, what do you think? You will wait for market structure shift? I won't, because it didn't clean the buy side liquidity. If it cleared the buy side liquidity before going lower, then it would make this entry as a very high probability trade entry. Now, if it went above and clean the buy side liquidity, that is also your market structure shift. Will you take buy? I won't do it because it didn't clean the sell side liquidity. That is low probability entry. I will sacrifice one entry to take thousand of entry. So far we can see it has actually traded the the order block level. So I think I'll just okay, it just missed it for one tick. If it can just close below the the consequent encroachment, not consequent encroachment, just below the the what can I say? This is opening gap. That that would be a chance, okay, to take short. I'm not telling you to take any kind of short. I'm just telling you that then you will get a chance to take short. Okay, this I mean how to say questioners. Okay, Bim NG, you can ask me the question, brother, please. Well, so we can trade before 10 a.m. or do we wait until 10 a.m. because I see many setups happens around 9:45. Are you talking about tomorrow? I mean, just before the news, this my world. Are you talking about, I mean, tomorrow, just before the news? If it is that, I mean, you are talking about tomorrow before the news, I will say you won't do anything before release, news released. Nothing. The best thing is you can just shut your, I mean, laptop down or PC, whatever you are using, you just shut it down and enjoy your, regular life, okay? Yeah, every day you will wait until 9:45 when you can read the there is no news, then you will go to your 15-minute chart, you will mark your buy side liquidity, sell side liquidity. I have already told all of the rules about the macro, so you have to follow all of them. Then you will look for here you do you see any setup happened? Any of you have seen anything happen over here? Like after clearing the sell side or buy side liquidity, it gave you the market structure shift with a fair value gap. Did you see anything over here? And the macro session has ended, so we don't have any entry yet over here. Maybe at the PM session we would get a entry, but we won't take any entry, okay? Today around 9:50 a move down that happened, but I didn't trade it because I was waiting for 10. And if you just wait to wait for some kind of better setup, brother, always you won't get chance to take entry. This won't happen all the way, okay? Sometimes you will see there's some kind of trade setup that you will miss. Before understanding the price, it will go away from you. You won't get that won't give you any kind of chance. So it happens always. If we just miss a bus, we will get thousand of bus. So I don't care, okay? If I miss a trade, I don't care. I will wait for the next entry. If I don't get any entry next time, I don't care. I will wait for the PM session entry. Though we won't do anything today in the PM session. I'll just close my chart. I hope I am able to understand. I mean, I'm understanding. You can understand me, okay? So, do you know of indicators for the ICT macro? Indicators, brother, are you kidding me, Stephen? What do you mean by indicators? Uh, I hate indicators, brothers, to be honest. I never use indicator. At the first, when I was trading like the retail trader, I used some indicator called RSI and MACD maybe, but I never understand them clearly. I never ever. I didn't understand them. So this is now, like, now look at the price. It has cleared the buy side liquidity. If it is able to break the consecutive encroachment of the new week opening gap with a very nice market structure shift, you can take your sell over there. This is your target. And if you ask how many handle is that, it's near about 22 handle. Okay, it's not a little handle. It is, see, this consequent encroachment send the price above the, the opening gap high, a big run. You have nothing to do. You don't have anything because it didn't clean the sell side yet. Okay, this is the thing. This way you will read your price. And never be afraid of missing trade. If you ever be afraid of missing trade, you will take the revenge entry, and revenge entry always lead you to the losing trade. It will never give you the winning trade. So every day is not for trading. Someday you will, you will miss entry. It happens. You will maybe you went to drink some water, you missed the entry. It will happen. Okay, so every day is not for trading. Some days you will just read the price. Some days you will take so many entries. Some day you will just take one entry. You will take some days losing entry. It all will happen. So do you know when it is a high time frame, monthly, weekly, daily, এর সাথে 20-minute macro কি? Okay, beam and this is inside the macro. Just forget everything, every single thing. There is nothing. Okay, just forget everything. No high time frame analysis, nothing. Everything you have to forget. You have to just follow the rules, what I told you about the macro. That's all, nothing else. Macro time. Steven, you don't know people to buy over here. So this is the obvious place where price should go. So when I have seen that it has cleared the buy side liquidity, if I have seen a very nice market structure shift which can break this consequent encroachment of the opening gap with a nice fair value gap, I will go for short, and that will take my sell side liquidity. That is the thing. And now macro time. Stephen Edosoman, okay? Stephen Edosoman, when you will go to my, YouTube channel, if you go to my YouTube channel, from there, if you go to the playlist, you will see a macro, okay? If you go to the macro, I'm just showing you all, okay? You see this one setup for live trade entry, ICT macro, full. It's near about 43 minutes. I talked about everything in this video about macro. Everything. There is nothing outside of this, this video. So just go to my playlist. From playlist, you will find the macro. From macro session, you can watch all of them. This is all actually that week's, I mean, the macro analysis, 4 macro analysis, all of the days. And this is the last Monday macro analysis. So you will see how, why I told you that 12 or 11 winning trade in a row. Why I told that. So you will see everything. So you can start from here. This is the introduction of the macro, and here on setup for lifetime trade entry. This is the video where you will find everything regarding macro. Every setup, every macro time, every rules, every requirements, everything. And then you can just watch, or like how it works actually last week. You can watch them. So it's up to you. So why you told we can sell? I think I gave you the answer. So guys, if you think now we can end, then I will actually close my session for today. If you are new, you can just give me, I mean, love, or you can just subscribe to my channel if you love my concepts. And so that's all for today, and talk to you later, guys. You're welcome, Stephen. Be safe. Don't take any trade, okay? This is the rules for news, big news. Don't take any trade after the AM session. See you guys. Please, if you are new, subscribe to my channel. If you are like little older, and comment, or I mean, do something so that I get some algorithmic something. I don't understand actually what actually this thing works. So some more people can understand about this channel. Okay, so okay, guys.